Welcome back to Confessions of a Recruiter with Blake and Declan. We are on a global mission to build the world's largest community of recruiters so we can all connect and succeed together.
That's right. If you want to check out more of Confessions of a Recruiter, jump onto confessions.tv, subscribe to our bi-weekly newsletter, access merch. Now, we hope you enjoy this episode.
All right, welcome back to another Confessions episode. And this one's special because we've got a new segment we've launched and it's called Bring an Expert In. And our first expert is Colin O'Loughlin. He was here before, but there he is now. But Colin O'Loughlin from Arch Brokerage. Now, mate, you are Brisbane's best broker, voted by the Courier Mail, and everyone wants to buy a house. Everyone's planning to buy a house. It's the number one goal of all Australians. We talk to them all the time. So, mate, we wanted you to come on, bust the myths, break it down, tell us what it's all about. So, mate, thanks for coming on the show.
Mate, absolute pleasure. I've been waiting for this invitation for quite some time. So, mate, happy to be here.
You're breaking the mold, mate. So this is the first time we have a non-recruiter on the podcast. So don't let anyone down, buddy.
Yeah, you know, in recruitment, especially, you know, our audience, they're either senior recruiters or agency owners. So they're in this kind of transition period of, I'm about to start a business. Can I get a loan? Can I buy a house? They usually have some money in the bank. And there's a lot of like tricky situations to navigate that probably you can give a little bit of advice on.
Yeah.
So I guess firstly, though, let's just walk through your background, where you work, the business that you started, and what you've been up to.
Yeah, so I got into finance was 2008, so fresh out of school. There's actually a bit of a funny story behind this, but my brother-in-law at the time called me. I was working at my parents' paint shop. So I came out of school. I actually wanted to do not much. And my folks were like, mate, you need to come and work. So I went and worked for them when I first fresh came out. And brother-in-law called and he said, mate, I've got an interview for you at Bank West in the city, teller position. And I'm going, oh, all right, I don't really know what this is about, but I'll go and give it a crack. I rocked up to the interview. It was a Monday morning, and mate, I bombed it. I went so terrible. You could imagine this is probably my first real interview out of school, and just went terrible. I walked away. I'm like, oh fuck, I'm no shot at getting this job. Anyway, they called me the next day, like, mate, you got it. And I'm going, oh shit, maybe I went a little bit better than I thought. Anyway, they wanted me to start on the Friday. And I didn't want to start on the Friday because I was like, oh, I want to go and get on the piss early. I had to travel into the city to go and work. Had to start work on the Friday. First day, showed up, all good. Played footy on the Sunday and actually broke my nose playing footy. So I missed work on the Monday, rolled in on the Tuesday, and black eyes. They're just going, fuck, what's this guy doing? Like thinking I've been in a brawl on the weekend. Tried to explain I was playing footy. Anyway, long story, but in the end, I found out the reason that I got the job was they'd just hired 2 tellers that had just gone through the full 6 weeks worth of training, came to the end of the 6 weeks and one of them quit. So they'd needed someone desperately, and mate, that's how I ended up getting in a position and ended up getting into finance. So,
well, that's an inspiring story, mate.
So anyway, like, keep working hard and you never know what will happen. Yeah. So, look, I started out there at Bank West. I was there for a good 3 or 4 years. Actually rose up the ranks quite quickly. Ended up in an assistant manager's job, and I was only 22 at the time, earning really good money, and ended up chucking it in the end because I was like, I just want to go out and party. I was like just really young to be in that environment and be in that role. Worked my way through. I actually went back and worked for my parents for, I think it was about 12 months, and then I was like, I actually was going to be a PT. I was a bit all over the shop, but in the end, I ended up finding my way back to finance. I worked at BOQ for a couple of years, and then I really probably found my groove properly whenever I went to Westpac. So I was there for about 4 or 5 years, and that's when I really honed in on doing a lot of lending. And I just really found a passion for it. I liked talking to people. I liked the challenge of, you know, not everybody's the same. Everyone comes from a different background. Some people have a bit of savings. Some people need more help. But it's like that guiding process of being able to help people on the journey of buying a property or saving them money. So I did home lending there for quite some time. Then I moved into a BDM role where I was actually working with brokers. So brokers would call me, workshop deals. I'd be liaising directly with credit around like, okay, how can we make this work? So I really got a taste of, I guess, 3 different businesses and how they are run in different ways, and then really getting a really good overview of actually the whole home loan process from start to finish in terms of like lodging an application, how credit will assess it. And I think that those things have they've gone a long way in allowing me to become the broker that I am, and in terms of looking at deals, looking at different clients, self-employed, PAYG, different types of incomes. I think all of that's just gone a long way with making it an easier transition to become a broker. So essentially I was dealing with all these brokers, and I was like, some of the questions that would come through to me, I'm like, I don't understand how they don't know some of this stuff. So for me, it was kind of like just a sliding doors of, I wasn't super passionate about, I feel like we were getting all these results, but they were delivering the news back to the client. So like a lot of the times you were dealing with shit fights, it'd be like, oh, finance is due on this one. So, I'd be running around going, hey, talking to different departments, hey, we need to pick this deal up, we need to do this. And that was just constantly ongoing. So I missed the customer facing stuff. I missed just talking to people. I wasn't so driven by like finding out about, someone's business and how it necessarily operates at that point in time. So the next progression to that was like, why don't I go and become a mortgage broker? And the more I looked into it, the more I was like, oh, you know what, I reckon I can probably do this. So I was really fortunate whenever I first came out of the bank, because going into that role, it's commission-based. So you're relying upon solely and wholly the business that you're bringing in, and that's your bottom line. And that actually drove me. I did love that part of it, but I just wasn't at that stage in my life where I was like ready to go balls to the wall, fuck, let's do this. Yep. So I was really lucky. Someone actually offered me a job from one of the brokers that I was looking after, and it gave me sort of like a crash course on what to do, but kind of also what not to do. The original idea was like, come into the business, you can buy your way in, you can be a part of this. And the longer that I was kind of there, not to shit on anyone, but the longer I was kind of there, I was like, you know what, I can probably do this myself and create something for myself, and I can grow this organically rather than having to necessarily go into debt to go on or save up and try and buy into this business.
Mate, great topic to talk about. This is what every recruiter gets put in the same predicament, honestly. Yep. This same conversation is exactly the crossroads that many recruiters find themselves in. And what evidence did you stack and say, hey, mate, I'm going to be better off putting tickets on myself instead of buying other people's problems?
Well, you're backing yourself. You've got yourself in a position like, let's say you're recruiting, right? You're already in a position where you're recruiting. People like you. You're building up a client base. People are dealing with people. People aren't necessarily driven by, oh, well, I'm dealing with A&A recruitment or whatever it might be. Sorry if there is an A&A recruitment out there.
They're one of our partners, mate.
But you know what I mean? So it's just like, if you've got yourself in a position where, let's say you're billing or however it works, right? You're billing X amount of dollars per month. What's to say you can't go and slap your name on that brand and put your face to it? Because that's going to really be the driver around how you bring in your business. So for me, it was just a matter of like, I'm just going to back myself here. And luckily enough, Sim, my wife, was just like, I feel like I'm the risk taker in the relationship, and she's very much a little bit more tentative. But for her, I think she could just see the passion that I was just like, I can fucking do this. I'm going to give it a go. And she was just like, oh, all right, well, go on then. Off you go.
It's nice having your partner back you when you want to take risks. A lot of the times when we speak to recruiters and they're like in that same spot where they're like, I think I can do this, but their partner's like, oh, I don't know, you've got a good thing going on. Why do you want to wreck it? And they're like really trying to rein you back in a little bit. So it's good to see that you've kind of come out the other end of that, and she was supportive, and obviously look where you are now.
Yep.
One thing that I find coming up a lot with recruiters is they're a PAYG, so they're an employee. Usually they're earning pretty good money. They've got a little bit of savings in the bank, And the crossroads that they're at is, do I buy a house first and then start a business, or do I start a business and then wait, and will it wreck my chances on buying a house? What I like about your background is, over and above just a random financier that hasn't started their own business before, so can't really speak to that as much, whereas you've been in the position where you've started your own business as well, and you've probably gone through this a little bit, I'm assuming. So what's kind of like your take on someone who's sitting there going, all right, do I start a business? Do I buy a house? What do I do first?
It's a good question, mate. I think if I look at it from a business owner being in that position now, think about, yes, it's going to take time, right? So the good thing about banks these days is the policies have drastically changed whenever it comes to self-employed borrowers. I think back in the day it was like, you've got to be there 2 years. We need all the returns. We need everything done. I think there's definitely a changing of guard that's happened, especially within the bank's policies, particularly in the last 2 years, because now it's more driven, there's, in the past it's kind of like, well, let's look at wages, let's look at the profit from within the company, which is like a really standardized approach. We want to take an average of the 2 years. If you've earned too much in the most recent year, then, we might take a percentage of the previous year. These days it's kind of like, well, hey, if you're paying yourself a wage for the last 6 months, and we can see that, and we can evidence it through a pay slip, we can evidence through an accountant's letter, sometimes that can just be utilised on its own, rather than having to delve too far into the company. So the time frame constraints have changed by a lot in the last few years, because, if you're talking about in real terms, if someone was doing, billing a shitload in that first 6 months and they wanted to go and buy a property, yeah, they might need a little bit more of a deposit, but it's like, that's a real thing. That's something that you're able to do. It's not kind of like, oh shit, I've got to wait 2 years to go and buy that property. So I guess that's one part of it. The other part is, what about the time that you're then going to spend remaining PAYG and the opportunities that you potentially lost? And that's my business owner's hat on, because if I would have started, I'll tell you one thing. So whenever I started the business, I started it in October of 2019. COVID hits, March 2020. So if I waited 6 months, firstly, I would have been going, fuck, I'm not doing this. COVID's hit. And at that point in time, I was shit myself a little bit going, fuck, I don't know what's going to happen. The world's shutting down. The one thing that we did focus on whenever it happened, we didn't have a large client base, because obviously we'd only been running the business for about 6 months. But we said, fuck, let's just go out and help people. Let's see, what are people going to need during this period? And it's not driven by money, although, the background to that is obviously if you're going out and showing people that you want to help, that hopefully that there's a flow-on effect of like, oh fuck, these guys actually give a shit.
Yep.
For us, it was kind of like, well, what are the banks offering for people if this really goes belly up and people are losing jobs and all that sort of stuff. And I know there was a few pilots in particular that we helped out, and it was like, well, what's the framework around like, freezing repayments? So that was one of the big things that came out. The banks go, you know what, we're going to let you freeze repayments for 6 months or 12 months while you get your shit together. Yes, there's going to be interest capitalized, but there's not going to be this stigma of like, you're not paying your loan, we need to repossess the property or anything like that. So if I look at that, if I waited 6 months or whatever it might have been time frame, I might have been like, oh fuck, I'm not going to do this. And then all of a sudden I've stayed in a role for another 6 months. Oh, I'm just going to try and climb the ladder a little bit further. I might buy into this business. So I think the biggest thing is like, just act with conviction. Like if you're going to do something, just jump in it. What's the worst thing that's going to happen? For me, it would have been like, whenever I look at my own personal situation, I could have just went and got a job back in the bank.
So what you're saying is, let's say you had 50 grand saved up and you're like, I'm either
which I didn't at that point in time.
Yeah. Let's say you had 50 grand saved up and you're thinking, do I buy a house first? The Australian dream, which, is a whole nother rabbit hole that I'm open to going into, but probably not for now. Or should I start my business? You could probably have both in a shorter period of time if you go, I'm going to start my business, bill really well, within 6 months, I can then buy that house that I wanted to anyway, rather than waiting that like 2 years to buy that house that it used to be. Is that what I'm picking up?
To add to that, could you actually buy a better house in that 6 months?
Well,
Because you could unlock
more earnings.
That's the question. That's the real question, right? That I think we're talking about here is like, the thing is, if you go and buy that house when you're PAYG, so you're earning a wage, what's the likelihood with that overhead hanging over you that you're going to take the jump and start a business?
Unlikely.
You know what I mean? Like, put my broke hat on, fucking buy the house. No, but no, seriously, when you think about it, what's going to be the difference in you starting your business, your own business, something that's yours, and you're earning potential, in comparison to buying a house? Yeah, okay, maybe you, like, let's look at COVID, right? If you didn't buy sort of at the start of that, obviously we've seen house prices increase dramatically. But for me, what if I didn't do that? What if I didn't go and start my business? I'd probably be, maybe back at the bank, or maybe I'm still working for somebody else, giving them a large slice of the cut of what I'm doing. But what we've been able to do in a 4-year period, 4.5-year period, is all of a sudden Sim is within the business, but we're growing our family. We've got number 3 on the way in
Whoa! Congrats, mate.
6 weeks.
Wow.
Due in 6 weeks.
Due in 6 weeks. So we're going to have our 3rd kid, but once again,
you're
I mean,
a dad like you are a broker, mate. You get shit done.
So I mean, we probably don't want to go the rabbit hole of like, the cost of kids and all that sort of stuff. But I think what we have been able to create in that 4 and a bit years is, it's like financial freedom in owning a business. Also the flexibilities of being able to parent. I think that's the beauty of owning your own business, is sometimes it's like you can go on, maybe you can take an hour out of the middle of your day. You can make that hour or a couple of hours up at 9 o'clock at night or whatever it might be. So I think if you're thinking about starting your own business, just fucking do it. Jump in, give it your best shot. Sorry, mate.
Sorry for cutting you off. Have you ever you do a lot of finance for employees and business owners, right?
Yep.
And you have an intimate understanding of their financial position. Obviously, we won't talk about anyone's financial position, but like, what's the biggest difference that you see between someone's finances, between running a business and someone's finances being an employee? Is it like a stark, wild difference?
Well, it is. It's like, I think you can really tell, like a lot of our high net clients are all self-employed, to be brutally honest. I mean, and like that's once again, that's not a knock on being, PAYG. There's like, we've got a lot of high income earners in that space still, but I think in owning a business, I think it just opens up so many more avenues. The earning capacity is, I don't know the statistics behind it, but you are driving every dollar that goes into your pocket. Whenever you're working for someone, then you're driving money into their pocket. Yes, I know that there's bonus commissions that you can earn from that. But I think it's, and being, whenever you own a business, and I think you guys can probably attest to this as well, it's like, you just become a different beast whenever it's yours. Like, you're just so much more driven in, creating something, whether it's, making money, or whether it's, creating a brand for yourself, whether it's the people that you want to help. I think it's just like, it's just something different inside you that comes out whenever you start your own business.
More fulfilling, I find. Like, you could literally be doing, it's almost like perspective. You could be doing the same tasks and duties, but for yourself, and be so much more fulfilled doing it than just sticking in your lane and
all depends who you work for, I suppose.
Yeah, and going between the lines, and that's what I find a lot of recruiters that I talk to, they go, oh, look, it's just, I'm on the hamster wheel, I'm just rocking up, I'm doing the job and I'm going home. What's the difference if I was doing it for myself? I said, you'd be doing the same thing, but you'd be like so much more appreciative, and you'd have more gratitude to your clients that want to work with you, because you're like, fuck, you really want to work with me. This is my client now. This is my relationship. And your relationships become so much more deeper. You connect with your clients more. I don't know if you were at Westpac, you'd be coming on a podcast talking about broking, but
you'd probably be running the Westpac podcast.
Yeah, but so your mindset kind of opens up, I find, and becomes more fulfilling when you know your name's on the door, so to speak. So yeah, so that's really interesting.
Let me put this to you. Sorry to butt in. Let me put this to you. When you started your own business, did you notice that people that maybe you didn't know were following you or talking to you or whatever it might be, like whether that be friends or family, all of a sudden engage in any services that you were doing when it became yours?
Yeah.
That was the biggest thing that I found whenever I was always pretty active on socials. Hey, I'm a home loan manager for Westpac or BOQ or whatever it might have been at the time, and not get much traction there. As soon as I put my name on the door, Colin O'Loughlin, Arch Brokerage, my business, all of a sudden, friends, family, I'm going, where the fuck have all you guys come from? Like, it's crazy the amount of people that are then invested in, like, hey, this is yours. You know what? I do want to come and support you. And, some of that's changed with, like, working for a singular company and we've got to go with Westpac to all of a sudden we've got access to 60 different lenders. But I think there's still a matter of, like, there's an element of trust of, like, I want to follow you on this journey.
Yeah, young Australians in business, they get raised up big time. And what are some other myths that people don't know? Because, mate, like me and Blake, we're obviously both customers of yours. We bought houses from you, and it was a consistent process for both of us, super proactive, just how we think we work with our clients. So we're really receptive to it. And a lot of the information we get is the standard cookie cutter before, getting to the point. Like, I know we spoke 5 years ago and I pretty much got laughed out the door at Westpac because I didn't have enough money to buy a house. But
that wasn't me doing the laughing.
That was the bank. But maybe 7 years ago, actually, not 5. And then to come full circle and, we still got it done is, I think, really special and I appreciate that. But what are some things that people don't know? Like, we were just chatting earlier and you're like, mate, we actually get paid the same from all banks. And you get access to 60 banks because companies and candidates come to a recruiter so they can get access to essentially what should be the best companies available to them, or the best options that's going to suit them, not just like one, just shafting them off. So there's a lot of similarities between recruiters, brokers. I think the simplicity of starting a business is we find our own clients and candidates, you find your own clients, and you've got the banks. So that's like a really low entry level business, which is why it seems a lot easier for us as well, which is a fortunate thing for us. But as a broker, what are some things that we don't know that that people should know when buying a house, thinking about, in the profile of a recruiter, they're high commission people, low bases. Sometimes they think, what's in it for them? Am I only getting sent to CBA because Cole's getting the best deal? Like, can you sort of bust some myths on that? Or can I fire some questions off and you can be like, all right.
Quick fire. Well, I guess one thing is, like, a big myth within this industry is they think that it costs to go and see a mortgage broker. That shit's free.
So it's like a candidate is free to use a recruiter. As a home buyer, potential home buyer, it's free to use a broker to buy a house.
Absolutely.
Yeah.
So the way that it works is we've got a main agreement holder, which is Loan Market in my instance. They're like the licensee. They hold the credit license. They're the conduit kind of between the bank pay them and then they pay us. So we get paid like on a monthly basis, and it's usually in arrears. So we get paid from the previous month, the month after. But we get an upfront and we get a trail commission. And like you said, all banks pay virtually the same, and we've got access to all these different lenders. For us, it doesn't matter who you go to. We want to put you in the best situation possible. So, we're going to do the research. We're going to try and find you the best rate. We're going to make sure that it's going to, suit what you want to do now and into the future. It's not kind of like, and don't get me wrong, I'm sure there are some shitty brokers out there that just go, fuck, this is going to be the easiest. So I'm just going to go and pop them over there. But for us, it's kind of like, let's find you the best situation possible. We're usually going to give you a multitude of options. It's really up to you. Like, we can recommend someone, but it's up to you who we go with at the end of the day. So, you know, there's the free side of it, which is always a question. So we get paid a commission by the bank. There's nothing weird or untoward going on with the interest rates. If anything, we're able to get you better interest rates that you can go and get in the market. But the big thing I say to people all the time is like, why waste your time going and trying to find the best deal when you can just engage a mortgage broker to do all the heavy lifting for you? Like, saves you, like, let's say we've got a self-employed client and they bank with, oh shit, I don't know if I want to give any names out here, but let's say they bank with like a local country bank or something like that, right? They might go in there and go, hey, cool, I want to get a loan for $1 million. Here's my financial blah, 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 blah. And the bank goes, oh, no, we can't do that. What are they going to do? You're going to go to the next bank, go hand everything in again, go, oh, can you guys do this? Oh, no. So on and so on and so on. So one of the good things I think personally about being a good broker is knowing the bank's policies inside and out. Obviously, the face-to-face stuff and all that stuff is great. And obviously, you want to be, you know, personable and people like you. But you've got to know the hard facts as well whenever you get people's documents or you know situations. A lot of the times now, I'll speak to someone, I'll get enough intel over the phone and I'll pretty much know, hey, that's probably where we're going to send the deal. Because I kind of have the rates. I'm always looking at the interest rates to know top of mind, well, who's going to give them the best deal? And then the other part of it is just the policy inside in my brain to go, well, all right, these guys do commission really well. These guys are really good with self-employed. These guys are really good with casual. These guys are really good with short-term self-employed. So it's like, what I really love is the easiest way to explain my time in working with the banks leading up to being the broker is like, that was my apprenticeship. That was me learning that shit, there are all these different policies. Banks do things different ways. And then when you become a mortgage broker, it becomes even more exemplified of like, oh shit, there is just like so much different stuff going on from a policy point of view that really you're almost in a position that you could nearly help everyone, which is crazy.
What I find really interesting is when you say different policies, this might seem really vague to people. And to kind of be really specific, and I'll use my own example here. I've got a property up on the sunny coast and I own it like 50-50 with my parents. And I'm trying to get a loan for a property down here in South Brisbane. And I'm like, yeah, I own this property 50-50. I want the best rate possible. The best rate might have been, I don't know, let's call it 5% with this one bank. And I'm thinking we're going to go there. However, that bank, they will only consider, they consider 100% of the debt that I'm 50% owner of. And you're like, oh, we can't send you there, mate, because they have to consider the full debt, not half the debt, even though you're 50-50. So that bank's out. And I'm sitting here thinking, holy shit, okay, so is that every bank? And you're like, no, we can actually send it to this bank because they will actually see it for, oh, if you're a 50-50 owner, we'll take 50% of the equity that you own and apply it to your application. So little things like that, that depending on each person's individual circumstances, whether they're a PAYG with a rental property, one bank might go, we don't consider rental properties because you haven't had it this amount of time and we don't classify, I don't know, deductions as part of your application. And then this bank might go, yeah, we're fine to consider that. And so these types of policy know-hows are actually super valuable that as a normal consumer, you would have absolutely no idea. And when I was applying for ANZ, because that's who I bank with, it becomes like this big issue that if I didn't have a broker walking me through these banks throughout because of these reasons, I'd just be sitting there frustrated as to why I'm getting knocked back and I'd have no clarity. So I think that's a really interesting thing around the policy side of things, knowing each different bank around which is your strength. What about storytelling? Is storytelling, now a lot of people think it's just numbers on a page and you're good to go. As a broker though, pull me up here if I'm wrong, but you need to be a fucking good storyteller. Yeah. Is that right?
Yeah. Well,
why does storytelling impact your application for the people that don't know how your application gets approved?
We got to remember at the end of the day, this goes onto someone's desk that's assessed fucking 10 different files that day, or it goes to a credit manager that's just simply looking at the numbers. Like, as part of a good submission to sending an application to a bank, you want to make sure you've got some really detailed notes. an understanding of like, what's this client looking to do? Or like, what are the mitigating factors? So that's something I picked up at Westpac, obviously dealing really closely with credit. It's like, we'll find for ways, there's always grey areas in policy, by the way. So it's like, it's not always black and white. Sometimes it's like, well, you know, what if we did this? Or, you know, to your situation, maybe it's like, well, wait a minute, we can see that the 50-50 ownership that, you know, Blake's not having to actually forego that full repayment of that loan. So it's just kind of like putting things together so that whenever it gets in front of that credit manager or that assessor, that they fully understand the client's position and what's happening with the deal. But also comes back from workshopping with the lenders that you're talking to as well. So for us, me personally, I'll never just go, oh fuck, we'll just put it up and see what happens, you know what I mean? It's always a matter of like, if there's anything that's grey, it's kind of like, well, hey, this is the situation that I've got. You know, how do you want us to present this? I've got this. So it's just kind of like breaking down the actual deal, having that conversation. And I always like just kind of getting that reaffirmance of like, yeah, like we'll do that. And obviously there's some more straightforward ones that's just like, they just go straight through. Obviously you put the application in, you know, you're going to get approved. But if there's any of the grey area, it's kind of like, well, let's have a discussion with the bank. Let's put everyone at ease. So like, we're not wasting our time, but fuck, we don't want to be wasting your time either at the end of the day. So that's the big thing.
I'm just connecting these dots to recruitment. So this is really interesting. So this is no different to
exact same.
A recruiter getting a candidate and going, screening this candidate, finding out everything about their position, and then going, I'm going to submit them to this company and I'm going to present them in this light because I know when the hiring manager has 10 fucking resumes coming across their desk and they're just, no. And then they have this like this story and this like outlook and this perspective on this applicant. And you're like, oh, okay, yeah, this makes sense. Let's get them in for an interview. No different for a broker. When they're creating a story around this is like where they've been in the past, this is where they're at the moment, this is where they're going in the future, and then all of a sudden you get this deal over the line. So it's really important to actually partner up with a good broker like it is with a good recruiter, because if you're partnering up with a shit broker or a shit recruiter, like no matter how good you are, you could just be flicked across and cross their fingers and you get knocked back. And if you were just with a better broker or a better recruiter, you'd actually get your foot in the door and get a better rate, get a better deal, or get the deal over the line in general.
I've seen instances where you could have a deal going to the same bank, because we've seen this before, where clients gone, oh fuck, try to get this through, no good. All of a sudden, we've submitted it actually back to that. That's the best option for them. Had a chat to that bank, gone back through that lender, and we've actually got it approved. And it's all just come down to just the knowledge of knowing what's actually going on with the client. Like it's actually mind-blowing the differences it can make by finding a good broker or a good recruiter.
Mate.
Storytelling.
That's all about storytelling.
That's why he's on him.
But I'll tell you something, right? So whenever we first started the business, I remember, so it was just me. Simi was actually still working at Westpac at the time, or BT Financial in the financial planning group. So whenever I first started it, it was just me. I did the bloody end-to-end process. It was fucking out of control. Like whenever you think about it now, I mean,
what's the end-to-end process?
What does that mean?
Well, it means like everything. So like I'm getting the documents from the client. I'm doing the meeting. I'm doing the submission. I'm doing all the compliance paperwork. I'm doing the, bloody reconciliation through Xero. I'm doing fucking everything to owning a business. Shout out ex-recruiter. Shout out ex-recruiter. No, but I'm serious.
We'll flick you that 50 afterwards, mate.
But 2025 ex-broker.
Okay, so if there are any recruiters out there that are interested to find out what it's like to have a VA support them in their role, whether that be to bill more, reduce tasks that they don't enjoy doing, or be a more effective recruiter in their niche, then we definitely recommend reaching out to the Outsource People or TOP. Reach out to them, inquire on how they can implement a VA in your agency and to support you. And if you mention ex-recruiter or Confessions of a Recruiter, they will give you a 13% discount off your bill per month on this VA that will allow you to scale your business, scale your desk, and to bill more and make more money. So go reach out to the Outsource People, say Confession sent you, get your discount, and see what is possible.
I went through that, and it's just there's just so much going on that it's kind of like, fuck, it's like we weren't spending enough time. What I realized over time was like, fuck, let's really focus on getting everything from the client. Because in those early days, it was kind of like, I'm running as fast as I can. Oh yeah, give me some pay slips. Oh yeah, what's your living expenses roughly? It's kind of like just working on the fly, trying to get work done. Yeah, okay, yeah, we can do that. Whereas what I sort of learned over time was we came up with a bit more of a process around like, hey, this is how we're going to do business. Guys, I need you to fill in this form to start out, and I want to get all these loan documents. And what then happened there was, we started to value our own time a little bit more, but we also valuing our clients' time more, because it's kind of like, well, give us everything, and then I can give you real-time information that actually works for you. So it's kind of like, I know exactly where we're going. I know exactly what you can do. Where I probably first started out, whenever I was just running around crazy at the business, and I'm like, yeah, your borrowing capacity is about, 600,000-700,000, which, wouldn't have been too far off. But then I might have got some documents back in my mind being like, oh, okay, it's just come down a little bit. Let's go and lodge that pre-approval. So whereas now it's like really process driven, so that we can provide the accurate information and give clients real answers.
And what about this one, mate? Like when we were going through the process, what we could have got approved for was mind-boggling. Why is that a thing?
In terms of,
Like when you go on a mortgage calculator and you put in your
No,
income.
even when you speak to Colin, he's
Yeah.
like, hey, mate, we can get you this. And you're like, what the fuck? I couldn't even imagine
Yep.
ever borrowing that much money.
Yep.
So like, why does that happen, mate? Because personally, you're like, I can't afford that. But how come
Well,
the bank can be like, hey, technically you
they
can
can
afford it
load you up with debt.
if you don't essentially go anywhere, and if you don't eat any food and you don't do this, this, and this, yeah, of course you can afford it. But like, why is that a thing?
Well, I think probably what we saw, probably particularly around when you two bought, I think what we saw is that was like a really common feedback. So rates were low.
Yeah,
Rates were low. The buffers kind of weren't as harsh as what they are now. So it was kind of like, that was the normal feedback we got. Hey, you can borrow this much. Like, oh shit. Like, you know what I mean? But at the end of the day, it's like for you guys, it comes down to earning capability. So if you're like keeping money in the business, reinvesting, then obviously you look at it and you're like, oh, okay, I'm only paying myself this amount of money. Fuck, I can borrow that. But, that repayment sounds huge. When you actually think about it from a business owner's aspect, the bank is looking, from like talking about general terms, the bank is looking at everything. Hey, what's your net profit? Do you have depreciation in the business? Is there interest outgoings? What wage are you paying yourself? So all these things start to add up. And so the bank's actually taking into consideration, well, what's that all look like? Not just, hey, I'm paying myself
120.
Exactly. I'm paying myself 120 grand a year. The bank's not just looking at that. And once again, I'm talking more general terms here, but it's kind of like, shit, the net profit's 200 grand. I've retained that in the business. I've got 120 grand salary here. I've got 80 grand worth of depreciation from a car that I've written off, that I've paid for and I've written off last year. Bank adds all that up and go, well, wait a minute, we've got, I don't know what that fucking adds up to.
$500,000.
Exactly right.
Yeah.
All of a sudden, you want to service on $500,000. Well, fuck, we're going to give you $2 million. You know what I mean?
Yeah.
So all of a sudden,
you're making 120 grand a year technically.
You're looking at it going, fuck, I'm only making 120. Well, you're not only making 120, but you're looking at that going,
Yeah,
fuck,
true.
I'm only paying 120. So it comes down to, but I always say to people, the bank can say, and it happens in reverse ways. Some people go, fuck, I'd love to be able to borrow more. And some people might be, this is the thing. The bank does a kind of like a blanket rule whenever it comes to expenses. So, and no two people are going to have the same expenditure. You could be earning 120 grand a year, you and somebody else, but your expenses, you might be like, oh fuck, I'm blowing $5 grand a month, whatever it might be, right? On groceries, bills, this, that, and the other. The other person might be like, oh fucking, I'm living at home, or they don't go to a fancy gym that's
Total
$200 a
fusion.
month.
They go to Tenerife Athletica and enjoy themselves.
But you know what I mean? Like, everyone's going to have different things that they want in their life or they're spending in their life. So this person might only be spending $1,000 a month. And mate, fuck, I see it all the time. But the bank might be sitting there going, well, we have a baseline, which is what they call HEM, household expenditure measure, that they allocate to whether you're single, de facto, you're earning X amount of dollars a year. So they will have a baseline of like, well, it's $3,000. We're going to say that that your expenses should be $3,000 a month. So this person that's only spending $1,000 is actually being penalised because they're like, well, fuck, I'm not spending $3,000 a month. But the bank wants to use that as a baseline, as a safety net, right? So this person might be sitting there going, shit, I want to be able to borrow more money because my expenses are so low. Whereas the other person over here, I mean, in saying that, if they're spending $5,000 a month, then the bank actually takes the higher of those amounts. But they might be sitting there going, I might say, oh, you can borrow this. And they might be going, oh, fuck, I don't want to borrow that amount of money. You know what I mean? So it's different situations for different people. But it comes back to budget. I always speak to people like, just make sure you can afford the thing.
So HEM is the one.
HEM?
HEM.
So $3,000 a month, no matter what you.
No, it's different. It's different for
what you
if you're once again. So if you're a business owner and you're paying yourself $120,000 a month, but you've got this net profit, you've got depreciation,
$120,000 a month. Fuck, you wouldn't need a broker.
Maybe not. Why'd you come to me then? But you know, let's say it's 120 grand a year. You've got all this other stuff. All of a sudden, the bank's assessing you, going, well, fuck. We're saying that you're earning 500 grand a year, right? All of a sudden, they're not viewing you as 120,000, and your expenses they're not working it off on $3,000 a month. They might be going, well, fuck, 500 grand. That's actually like $6,000 a month. So it's a sliding scale. All banks have different, and I mean, this comes into borrowing capacity as well. So all banks usually have a different HEM expense depending on the applicant. So once again, talking about that sort of thing, it's like, well, they might say, Westpac might say 120 grand a year, $3,000 a month. CBA might say 120 grand a year. Well, we only think it's $2,000 a month. So everyone has a different sliding scale on this, which then feeds into, well, that bank's HEM is a little bit lower. Therefore, you can actually borrow more money with them, which comes back to, fuck, you're crazy not to have a chat to a broker because, once again, a bank might say yes, but you might only be able to borrow 500 grand with them. And maybe that's your deal and you're like, fuck, that's plenty. But maybe you go to another bank and they go, well, shit, you can actually borrow 600, 700. The other thing is, on top of the HEM, is there's also a buffer that banks will add on top of your loan, right? Which is the whole idea of that, which is it's a great initiative, is it's kind of like, well, you know, rates continue to increase, which obviously we've seen over the last couple of years. We want to make sure that you've got the affordability. If those rates increase by 3%, that at that stress level, you're still able to make your repayments based on your situation. But there are lenders out there that might only go, well, we're only going to add a 1% buffer on top of that, or sometimes in no case a no percent buffer on top of that. So the monthly repayment and the affordability once again increases. Policy.
Mate, how are we ever meant to find this shit out? You literally can't unless you talk to, not even brokers, mate. They just need to talk to you. But
what was the award that you won again, mate?
World's best
broker, Brisbane.
Best mortgage broker in Brisbane.
yeah.
What's that? What's that based on? Is that based on like customer service, stuff like that, looking after people?
You know what the beauty of this is? There's, I think I've spoken about this before, Deckers, but the beauty of this award and why I actually am like, fuck, it's a pretty cool award to win, is the fact that it's actually not numbers driven. It's not like, fuck, how many settlements have you done? How much? Because like some of the brokers on that list, big dogs, man, big dog operators. And you know, we're slowly sort of finding our way climbing up the chain, which is awesome. But it solely was based on feedback that, or people voting that were happy with the services that we were provided.
Nice.
So like, we don't have the biggest social media at Arch Brokerage. We don't have the biggest like social media in the world. We don't have a heap of followers. But one thing I will say is like, fuck, they just come out in droves whenever that came out. It was just like, well, they must have, right? And I just look at that. We've only been around for 4 years, but we must be doing something right. And it's the experience that we've provided to our client. Because all that other shit, it's like, how many dollars you've written, all that sort of stuff. Obviously, that goes in the back pocket, but like, fuck, why do I really do this? to be honest, I'm just along for the journey. Like, I fucking love telling people, hey, shit, guess what? Your loan just got approved. Hey, guess what? The house is yours. Congratulations. Yeah, the bank owns, it's got the mortgage on it and all that sort of stuff. But being able to come along for that journey's fucking so special every
And
time.
sitting there in that grey jumper and you just folding it, putting it in the thing, chucking it in the post.
Mate,
Fuck
you know
yeah.
what? My parents, because you sorted my parents out as well.
Yeah.
I came over for like a dinner, and I think Dad was talking about you, I don't know, at one point. And then all of a sudden, an Arch Brokerage hoodie came to the door, and Dad's like, mate, were you fucking talking to Colin about me? I'm like, what? No. He's like, I just got a fucking hoodie. I was like, oh, that's awesome. He goes, this fucking feels pretty good too.
So, actually, you know where I get them from? The print bar.
Yeah, nice.
Oh,
So
just
I got
over here.
Yeah. So, and funnily enough, Sim knows the owner. She used to do CrossFit with him out at Mitchie.
Jared,
Andrew.
his brother.
Yeah.
Yeah, nice.
So, mate, but everyone says the same thing.
Did I tell you about them?
You did.
Oh, nice.
Because I
They're
said
the
to you,
best.
because you had the
Yeah,
blended. Yeah, and I was like, fuck, that looks sick. I need to get some. I need to get some apparel. And one thing that we just got onto was hoodies, and I was like, it's just something different. Like, I remember when I was with the other brokerage, it was kind of like, oh, should we send out a
Pen?
bottle of wine or what's
A pen?
a pen? And I was just like, it's kind of cool. It's got our branding on it. It's subtle, but it's not fucking like in your face. It's kind of like, it's subtle on the jumper. Something that like people don't really give a shit what's on them, especially when you're cold or like it's a nice winter's evening. You can just chuck the Arch hoodie on.
Yeah.
And mate, the amount of people that send me photos in them first and foremost, but like what tends to happen, I don't know if it's the same with recruiting, but like you start to like get in these groups of people that hang out together. So whether it's like,
Well, mate, look at the trickle-on effect from us.
Oh.
I've just found out about Blake's parents,
Yeah.
Tina and Ed,
yeah,
Jess.
yeah, mate,
Fuck,
yeah.
Who else is there? Tina's dad?
Yeah,
Like,
I think you two are actually fucking our one of our top referrals, to be honest.
Really?
With like clients that
Yeah.
come back through,
Yeah.
which maybe just comes back from being a business owner, word of mouth. You obviously like spreading the
mate,
word.
if we
but-
put our name to something, people know it's fucking legit.
well,
Go
So,
speak
yeah.
to Colin at Arc Brokerage.
but so that was something that we just started doing, and so anyway, sorry, I've got one of the first clients we brought on. It's like this. They're all engineers, and they catch up for this. They do like a family. I mean, some of them are family, but some of them are friends. And it might have been 12 months ago. They sent me a fucking photo. They were all in their Arch hoodies having dinner. No shit. There was like
Wow.
15 of them there, and I'm just going, fuck, how good's this?
Yeah.
Bro, that is awesome.
That's what
I'm
it's
so
about.
proud of you.
Yeah,
Yeah, that's
100%.
awesome.
Because it's like you create a community in a
Yeah.
sense there. It's just like, oh, fuck. Oh, haven't you got a hoodie yet? You know what I mean? Like, so it's, mate, we love doing it. And it's
Yeah.
a small cost. It's the bloody say thank you for coming on the journey with us, So,
And if you want to work out like a few other things, like what really tarnishes your application, because I know the myths come around like Afterpay. Afterpay. Everyone slanders that and says, fuck, if you got Afterpay, you'll never get a loan. Because that's like tax. What are like some shit that really sets you back that you want to be weary of and go, make sure I'm not in that position? If you love a bit of e-com and, that big
Those
Black
Amazon
Friday,
subscriptions.
those Amazon subscriptions, you're losing track of your receipts, you're buying that much stuff. What do you do in those? What are some pitfalls to avoid?
well, the one thing I will say, not to bloody be too salesy, but like have a chat. Go and have a chat to a broker, or go and maybe not to a bank. Go and have a chat to a broker. Like, have a look at that. I mean,
Can you give us any layman terms right now?
well, okay, so spending, right?
Yeah.
Spending was a big thing back like 2 years ago, actually, right around COVID. It was like, oh, fuck, how much are you spending on Uber Eats?
Yeah.
The bank was going, what's this? What's that? That's like eased off a fair bit. It does have to do with clients' declared expenses these days. Now, we've got an obligation to go through those to make sure that you're not taking the piss. You know what I mean? Like, oh yeah, I'm only spending $1,000 a month. Then all of a sudden we go through the bank statements and we're like, fuck, you're spending $5,000 a month on this, that, or the other. But there's room to move there. It's kind of like the bank kind of accepts that, maybe Christmas had just rolled around and you'd spent more than you usually would. But so budget's a big thing. Like get a handle on what you're actually spending. I mean, that will come down to saving as well.
So, you got any like apps or any tricks that they can use to rein their budget in and track it?
A lot of the banks have it these days.
Yeah.
Like
it's automatic on your app.
Westpac, I know Westpac have it, CBA have it, I think NAB. I think a lot of the banks have now some form of way of looking at that. One thing that we do for our clients is whenever we obtain the bank statements, we have a system that runs through and gives us the last 6 months worth of expenses for all fields. So like groceries, entertainment, dining out, health, all that stuff. So we've got a full breakdown. So like one thing I will say is if you want to have a look at it, reach out or go and have a chat to a broker, because I mean, it costs us 2 parts of bugger all and we don't charge anything onto the client for it. It comes down to like that research phase. But I guess that can kind of ascertain what that's going to look like. You can create a spreadsheet to start to have a look at, okay, where's my outgoings going?
I always thought, and I don't know if I made this up, but I always thought that if you could prove financially that you're putting away whatever the monthly or weekly payment amount is of the loan that you're going for, that should be enough credibility to an application to say that you can afford and buy the property. So for example, if I was putting away $1,000 a week, or the mortgage I wanted to get was $1 million, and I don't know, let's call it $1,000 a week, and I was renting for $550 a week, and then I was saving $450 a week, and I just say $450 a week for 6 months, kept paying my rent, and then I could go with the application and go, I'm already saving the $1,000 a week for that mortgage, so this is like my proof that I should be able to afford that $1 million loan. Have I just made that up, or is that all right?
It goes a long way.
Yeah.
One thing I will say is, obviously, the less savings you have, I guess the more reliance maybe you've got to get on a guarantor, or you're using one of these schemes that are available right now that the government are providing for first home buyers. Like let's say you've had 25 grand sitting in a bank account and the bank's not seeing that move much, and you're borrowing your absolute max, and maybe your living expenses, you're spending a little bit more than maybe you should. That's when questions are going to arise, right? But if you're in a position where, like you just said, you're renting, you're putting away money, there's going to be less of an onus from like credit looking at it going, oh, fuck, you're spending way too much money, or, you know, there's just going to be less question marks on your application. So the more that you can get in the rhythm of putting away enough money that would be like a mortgage repayment, you're showing there's a few C's that go into actually putting a credit application together, but one of them is character. And so you're showing good character by like, all right, these guys are, you know, maybe it's paying off your credit card in full every month. Maybe it's you're paying rent on time all the time. Maybe it's you're putting away $1,000 a week or a fortnight or a month. All this stuff comes into building what is a credit application, which is ultimately going to be the difference between you getting approved or not. So like, once again, if you've got an application that maybe sitting on the fence or whatever it might be, all these mitigating factors of like, you know, look at the character of these guys, saving really well, renting as well as saving, like all that stuff is just going to build your profile whenever it comes to applying for an application with a bank.
And what are the 3 C's people need to be worthy of? You said there's 3 C's.
Well, no, there's like 5.
What are the 5 C's?
Can't think of all of them off the top of my head, mate. Character's the main one that I always look at. Character,
the big
credit.
C's, the character.
It is, mate. It is. But I think it's just like that just goes into the submission whenever we're putting it to the bank. But the big thing is like getting a handle on your budget. Credit reports, I think, are a really good one. Once again, we can order those for our clients for every application we do. You'd be surprised how many people forget about a bloody GE or a Latitude card that they had for buying a couch or a freaking, you know, a TV or whatever it might be, interest free. So it's getting a handle on what's actually happening there. Maybe someone's forgot to pay a power bill. All of a sudden, it's freaking there's a default there that hasn't been paid. So it's like, I guess it's getting you like credit prepared for when the time comes. So the one thing I do say is like, there's no bad time to go and talk to a broker. Fuck, mate, we sat down, what was that, 7 years ago or whatever it was, and it's like, okay, we mapped it out a little bit, and then we stayed in touch, we remapped out. Like, it gives you the great thing about going and seeing one, fucking whether it's right at the start, gives you something tangible to work towards. Like, if you don't know, if you're just like, all right, I'm going to put away $500 a week, I'm going to save 20 grand, and then you go and have a chat to a broker, or then you look at, I want to buy something for 500, oh fuck, I need more money. Like, you're kind of just working towards nothingness.
Yep.
Whereas if you got something tangible, it's like, all right, I know roughly what area I want to buy in. I want to be in Tenerife, or I want to be in Kedron, or whatever it might be, right? What's that roughly going to cost me? Okay, well, how much do I need to save? And that's the stuff that we can go through. Costs you nothing. And then I get to jump on the journey with you. I get to, we sit down, and then 6 months' time, it's like we re-look at it. Oh, fuck, guess what? You're ready to buy, which is the best feeling in the world. The amount of people that I've went and spoke to, and then 12 months' time or 2 years' time, we go and fucking buy the property. It's like, there's heaps. There's so many people that we help in that situation. And honestly, fuck, they're the best ones. Yeah. It's like you've actually helped them from what I go. There's plenty of people that are like, hey, shit, I've saved the money, which I'm also super proud of. I'm like, great work for getting in that position. But, man, just jump on the journey sooner rather than later and actually start to find a tangible goal to work towards.
And what if you are a recruiter? I think that's really special, and that just proves, you're doing things right, obviously, to have that compounding effect. What about if you're a recruiter, say you're billing 700-800K, you're earning 250, 300K, but your base is considerably less. It makes up for way less than a third of your income. Is it the same as a business owner? You just got to find the preferred bank that likes high commission people. And what are the general rule of thumbs? Let's say the banks that do consider that, what are the general rule of thumb? Do they have to take part of the commission, or how does that part work? Because that's also another huge concern, or being a contractor versus being an employee, and that into those.
Yep. So it's with earning like high commission, lower base salary. You've got to find the right bank, because all of them operate a little bit differently. But there's a good sum of them that will like take on your current year's earnings. So let's say like last year maybe you didn't have such a good year. Maybe you made 50 grand base, and maybe you made 50 grand commission, right? This year you got 50 grand base, but all of a sudden you got 200 grand in commission. You're fucking knocking it out of the park, right? Or that's what you're on track to make. Different banks will assess that differently. So some banks will go, well, you know what? We're going to annualize your current year to date. So they'll look at, well, what have you earned this financial year? Generally speaking, the minimum period is 3 months. Some of them are 6 months. Some of them will then go, well, hey, let's see what you've earned this year. Oh, fuck yeah, you're on track to make 300. Oh, you only made 100 last year. Well, we actually want to take the lower of the two. So therefore, if you walk into the wrong bank, all of a sudden you're handbraking what you're able to potentially borrow, because there's other lenders out there that are going to, look at the commission income completely different.
So you're telling us you have a massive quarter and it could literally change your life.
Yes. I had recruiter, actually. I won't name any names, actually a referral from you. I had a recruiter that came and seen me, and when we did the initial figures, I was like, yeah, okay, this is roughly what you can this is what you can borrow. By the time he was ready to go, he'd had a couple of big months of commissions, and it changed the borrowing capacity by $200,000.
Wow.
That is truly life changing.
Well, we were talking about buying something for 500, and now we're talking about buying something for 700. And originally he was sitting there going, what am I going to be able to buy for 500? How far out am I going to have to go? First home, good savings, by the way, all that sort of stuff. But he was just like, oh, fuck. I just don't know if I'm going to be able to get what I can get. And it's just funny how dramatically it changed.
I know who you're talking about.
When the time come.
Yeah.
So, that just goes to show.
Fuck.
So
I was there. He told me.
He'd talked to another bank. And that bank viewed it completely differently. So he would have been far worse off going through
I was
them.
there on the other side. He's like, bro, I fucking can't do anything. And then I was like, catch up with him every couple of months. He's like, yeah, bro, Cole did this. And I'm like, yeah, mate, he's the best. And he's like, yeah, mate, I can't believe it. Because it's opened him up. He was looking at like fucking whoop or just cancelled the idea.
Yeah, correct. And that, I think we were talking about that before, but like some people will walk away deterred from that. going, oh, I can't do it now, or I'll park it for 12 months, or I've got to save more, or whatever it might be. Even if you've got a second opinion, actually I don't get people's loyalty to a bank. The real common one is, I had a Dolomite account with CBA, I've been with them forever. But that loyalty actually ends up costing you. We see people that also have already got pre-approval, then they come and reach out to us, and it dramatically changes what they're able to do. So it's kind of like, if absolute worst case, costs you nothing to go and get a second opinion.
Yep, love that. Mate, that's been awesome. Thanks for coming on and sharing your wisdom and some insights. So if there's recruiters listening to this and they want to get their finances in order, they want to get a mortgage, they want to get a car loan, or they just want to see what their capacity to borrow is, how do they reach out to you? Yeah,
so socials or email or phone, you'll find all that information online, but it's Colin at brokerage.com.au. And honestly,
what's your number?
0499 303 472.
That number again is.
But honestly, I love chatting about. This is going to sound boring as fuck. I just love chatting about home loans. I love chatting to people about where they've come from. What are they looking to do? What do they want to buy? Just feel free to reach out. I'm just happy to just talk some shop if you want to talk shop.
Nice. And mate, you've got a team. What's the structure, or what's the delivery team look like now? Because mate, there's a few more blue shirts popping up every week.
Well, it's crazy, isn't it? I think about that journey. It was, so it started out as me. Simi was still working in the bank. Then she came out and was doing sort of that back end stuff. Then we had Jude. Sister joined the team. And then in the last 12 months, we've added 3 people. So, there's 7 of us now in total, 3 brokers, 4 support staff.
Nice.
And mate, it's been the best thing ever, growing the team, getting the foundations behind you to actually, make sure that you're looking after your clients as best you possibly can.
And serviceability is really good. Serviceability is really good at the moment. And mate, you can deal with anyone in Australia, hey?
Absolutely.
Yeah. So anyone can reach out to you. You've got plenty of capacity. You're ready to go. And I'm excited, mate, because I know what it's like, mate. It's a special feeling being able to hear that on the phone. So, mate, if you are a recruiter looking for this...
And I'm invested. I'll tell you right now, the guys in my team probably hate me for this, but I get a formal approval or I get confirmation settlement goes through. I'm fucking going... I'm up, man. I'm up and about, jumping up and down.
Yeah, nice.
Let's go. Love it. Recruiters want to reach out. Thanks, brother. Appreciate you coming on.
Mate, thank you guys so much. I'm proud of both of you. So, thanks for having me.
Thanks, dude.
Awesome. Thanks for tuning in to another Confessions of a Recruiter podcast with Blake and Declan. We hope you enjoyed and got a lot of value and insights out of this episode. If you do have any questions or you would like to recommend someone to come on the Confessions podcast, we would love any introductions. And remember the rule of the podcast: like, share, and recommend it to a friend. Until next time.